Hey guys, so today is Tuesday and we had PPI at 8:30, Hamburg News. Actually, today was a really uncommon day. It was a only up day, and actually I made a really mistake. I made a lot back then, which is also really rare. What I already journaled, but I also obviously want to talk about it. So what I mean by that is that we are in really bullish conditions. So on the daily chart, just displacing higher. We saw that before right here, sweeping out the lows. After that, only aggressive displacement higher. And I think now it's definitely the same. We are looking for higher prices. Obviously, in that case, we are already just not really able to look for clean shorts, especially because we're in a position where we clearly are displacing above higher time frame buy liquidity. Therefore, it's really difficult to look for shorts, and that's basically the mistake I made today. So why even did I look for shorts? I mean, obviously we have a really bullish trend, and in that case, most of the time I'm definitely trading aligned with the higher time frame, trying to look for longs. But today was a bit different. So with the opening right here, basically where is it? We have to drop lower. So with the opening right here, we traded higher and swapped New York Open Kill Zone buy sell liquidity, and daily liquidity was already swapped. And I mean, from there on, I think the truth is that the market maker buy model is already in play. Why? Because we swapped such obvious, really obvious pre-market sell liquidity. So trendline liquidity right here. We had also SMT with ES. In that case, our market maker buy model right here is in play, and from there on we are only going to see higher prices. That's just it. That's the fact. We cannot expect that we will look for equal session lows, even if this really looks ridiculous right here to leave something like that intact and from there on trade higher. Also huge inefficiency. So we already traded higher from there a lot and did no damage to the session liquidity. So to me, it looks like we are also really overextended. I mean, that was yesterday right here. So that was yesterday. Obviously, we look for longs. Why? Market maker buy model down here in play. We have higher time frame targets buy liquidity right here to look for. I think that's a reasonable target to look for. Also, the huge inefficiency right here. We want to see that we basically close in that case. So therefore, to look for longs in here is, to me, makes definitely sense. But just let me check which trades I took there. So I traded basically, I took a continuation trade right here. That was it. Was really looking for longs in here. Got stopped 2 times. Catch the long right here, and also trade a really short-term retracement right there. But today, why is today a bit different? So if we drop down basically to regular trading hours, we can see that we have, where is it? Right here, that we have a huge Newton range gap, so 100 handles, and therefore I even want to see that we trade back to CE. So therefore, it's, to me, we are really overextended, not only on electronic trading hours I showed you before, but also on regular trading hours. Therefore, I think it makes sense that we have a high time frame retracement, not only a short term retracement, but also a higher time frame retracement into that gap. And for example, yesterday it was different. Why? Because we opened up lower, traded lower, manipulated lower, swapped regular trading hours as liquidity and electronic trading hours as liquidity, and from there on we could trade this rally higher, align with regular trading hours. Why? Because we wanted to see that we trade back to CE, which is right here. So there you see basically the big difference. So yesterday trading aligned with both. Today we are, in my opinion, overextended on both, and I'm trying to frame a retracement, but it doesn't play out. And it really happens sometimes that in that case my draw for price is just not correct. I think it happens basically 90% of the time that I'm correct with my higher time frame analysis or with my objective for the day. Why I'm still basically losing is most of the time, really most of the time, due to money management, which I'm really not good at and I still have to improve on. But yeah, today was basically not the case that I was right about my objective. Today was only an up day, and those are the really difficult days, I have to admit, because I'm trading aligned with regular trading hours. So I think I mentioned it now before, but I'm basically trading aligned with my model, and it just cannot play out. But I think it's also obvious just due to the obvious bullish higher time frame conditions. I mean, of course, yesterday we were also bullish, but there we were able to frame a setup basically aligned with regular trading hours. I think if we are not aligned with regular trading hours, we either do not trade at all, or if we trade, we can only look for longs. That's just basically the fact, I think, in here, in such really difficult conditions where we just rally without any reason higher. So I mean, this rally is just it's way too overextended, no higher time frame retracement in there, also completely against regular trading hours. Yeah, those are the days which are really difficult. Why? Because to me, we have on a lower time frame, definitely that's right here, is basically a valid ATM model short, where we are looking for shorts right here. Yeah, completely basically shorted in that case the low of the retracement. But I mean, on different days that would have been a completely valid and clean entry, SMT in play, trading aligned basically with regular trading hours lower. So yeah, would have been a beautiful rally basically back into the range you can see right here, sweeping with that 930 opening, sells liquidity. Also, more importantly, New York open kill zone sells liquidity. So which was still intact basically on ES and also on NQ. So not even in that case we swept New York open kill zone sells liquidity. So in that case, yeah, I think it's really difficult. Once again, also tried to short right here. Why? Because we had really a strong confirmation. We closed below CE of the basically new how we call it, new gained bearish farewell gap. So yeah, basically closed below CE of the bearish farewell gap, and more importantly also respected the CE level right here. So we closed below CE of the wick, and just look closely how we respected it. So the bodies really stop right here, and from then we trade lower. And if we would have been able to displace with the candle right here, then it would had played out. I think that's correct to say. But in that case, if we fail to trade lower from here, we're going to reverse. That's why I mitigated right here and I got stopped, and also entered long right here. Because I knew, okay, today's only an up day. We are never going to see today's regular trading hours opening range gap going to get filled. In that case, we know, okay, we are going to rally, yeah, just higher with our Fibonacci extensions of our today's opening range, which is basically the low which formed with 9:30 to 10 a.m. So actually that's not quite correct, because it's a 9:22, that's a 9:30 low, so it would be like that. Still, it was actually how did I had it before? Okay, maybe let's change that. So let's do it like that, and in that case it's even. So yeah, in that case I entered long right here. Why did I get stopped right here, break even? Because we traded above the high right here, and yeah, I would never go break even right there. But today, just because I already took 2 losses, I cannot lose more, so I have to go break even. The perfect stop would have been below CE right here of the price run. Why? Because the wick respects CE, so that would have been a better wick definitely. Um, and then what you can aim for is basically, yeah, Fibonacci extension tool. So the minus 0.25 level right here, minus 0.5 level of the opening range. And I mean, that's basically it. So we can also, what I really like is to look for event horizon also as well. I did before, which would be basically in between both levels. Yeah, so that's basically it. So on those days where we obviously do not, or where we obviously are not able to trade back to the regular trading hours new open range gap, we have to look for longs. And when we do that is basically after we took out this liquidity, had a yeah, retracement. Basically, we are still within the right time. And right here, that would have been our perfect long actually. Closed above the Fair Gap right here. In that case, inversion Fair Gap, traded lower, tapped it, traded higher, perfect long. Yeah, to go break even, I was forced today. Otherwise, this would have been our perfect long opportunity right here. Also with the inversion Fair Gap right here, respected it. Yeah, I mean, a bit close below CE, but bodies are respecting the gap, and in that case, the wicks do the damage. Now I'm disconnected from trade away, so you don't see the executions, but I got stopped down here. Yeah, I mean, that's it. Everything was already said. I think it's just, yeah, it's not easy to trade lately. I have, also, I really have to admit, higher time frame conditions are obviously higher, but they don't really let many opportunities to participate in the, yeah, quality price runs. So also to me, the objective higher today was clearly, obviously, clearly higher. Why? Because ES did not had swept the daily buy sell liquidity. So on ES, the daily buy sell liquidity is above new open kill zone buy sell liquidity. Therefore, to look for longs was perfect with the opening. But the opening already, yeah, only took out the sell liquidity right here and dumped higher. To me, I do not really want to participate in the opening. So therefore, I'm really, yeah, just got left out on that. I mean, it's okay. You can trade the opening, but I think it's the opening is like a, to me, it's like a price run where they don't want that anyone else, any retail traders, basically participate in. It's just my opinion. I think it's not really a quality price run within the opening. It's always high volatile, and you do not really know where it's even aiming for always most of the time. So yeah, I really want to wait for the 10 a.m. macro, but still we would have actually we would have still caught this really nice rally higher basically right here. But yeah, in that case, yeah, really journaled that I'm really cautious about those conditions where we are trading against regular trading hours, but we have really aggressive displacement on the daily chart. Then we cannot look for shorts. Even if we are trading against regular trading hours, we cannot look for shorts. We have to look for longs if we are this bullish. That's basically what I learned today. What I also, I think, learned before once or twice, but it's really happening rarely, such conditions. Therefore, yeah, I think I did a mistake once or twice already, but yeah, really getting basically better, I think, with that, because also the long run here, I really liked it. The opportunity to go long. I think, yeah, definitely also getting better with analyzing wicks, how we get respected right there. Also trying to get better with money management. I think that's still the most important point. Basically, money management is really decides in my opinion, and also in my case, if I'm going to be profitable or not. So yeah, that's it. Once again, really important. If we are really strong displacing bullish higher time frame conditions, we cannot look for shorts, even if it's a ATM model short, even if we are trading aligned with regular trading hours. We have to look for longs. Yesterday, for example, was a high quality trade to go long. Why? Because we are trading aligned with regular trading hours and also with electronic trading hours higher. Still, yesterday's trade was difficult. Once again, we have difficult conditions. Today, I should have not looked for shorts in here. Should have been really patient. Why? Because if we we should not trade against regular trading hours. Once again, yes, that's true, but in that case, because we are this bullish, we do not expect that we are going to close in today's Newton range gap. Therefore, we have to wait for a short-term retracement, for a short-term run on stops, and then we would look for longs, in that case the long right here, after we traded higher, displaced through and invalidated basically the short setup right here, also using the inverted gap right here, and then only looking for Fibonacci extensions, projections basically of the opening range, and that's it. So yeah, hope you enjoyed it. Hope you learned something new once again, and see you soon.